today's video, I want to talk to you about the realities of property development. I want to go through the good, the bad and the ugly and talk about some stuff that I've not really spoke about before. Okay, so I'm here with my friends, this guy.
Yeah!
Disclaimer, I am not a financial expert. I would never claim to be. I'm not a property expert. I'm just telling you my opinions, my experiences and what's worked and what hasn't worked for me. You are going to get bad tenants on occasion. You're going to get tenants that don't pay, that try and renegotiate their rent. Choose carefully. I much prefer, when I was starting out, to actually manage the properties myself, because I was able to get experience in managing tenants, experience in knowing when people are taking the piss. And that just gave me a really good insight into what it takes to manage a property. And then when you hand it over to property managers, you know, because you've got first-hand experience in what it takes, so you know if they're slacking and you know if they're doing a good job. Also, another thing is tenants and repairs. You are going to get calls saying, I need this fixing, I need that fixing. So you need to make sure you have some contingency every month put aside for that situation. For example, they might need the door repairing, the boiler might break down. There's certain things what do happen. For example, what happened to me was very recently, like 2 weeks ago, I had a tenant and the heating came off for whatever reason. And he tried to get the heating back on, so he put both of the stop pipes on the boiler on. So they're both facing this way, which meant it caused a massive leak throughout the whole property. So it's actually damaged the property. Luckily, I took a deposit of £500 and I managed to get it fixed for £200. Just basically pay my plumber to fix it. It was a lesson learned that if I didn't have any money to actually pay for that plumber to come out and fix it, that could have been game over for me. So make sure you have some money put aside for repairs. Say if you have a 5-bed HMO or a 6-bed HMO, even a 4-bed, if you do it right, if 1.5 rooms are full, that can be your mortgage and your bills paid for. The rest of the rooms are profit. Compared with a single let, you have to have the whole property filled and they have to be paying in order for you to make any profit. That to me just indicates that there's less risk with the HMO model for myself. That's not to say I'm advising go straight for HMOs. I think you can go straight for HMOs if you have someone there that is really experienced and that can help you. I don't want to advise anyone to say do this or do that, but I think what will be a nice starting point for your first deal is a 4-bedroom multi-let or HMO. There's lots of locations that are not Article 4. There's lots of places where you don't need planning permission for a 4-bedroom HMO, and a lot of places you don't even need a license for a 4-person HMO. So you just need to check the council's website and have a look. I get a lot of people asking me when they're starting out, what would you recommend for a first deal for someone? And I think a 4-bed multi-let, 4-bed HMO is a great place to start. You get experience in managing tenants, you get the cash flow of a HMO. You should expect, if it's in a good location, upwards of say £600, £700, £800 profit per month. In a good location, it could be say £1,000 a month. But let's say conservative figures and say 700 a month. 4-bedroom multi-let, 4-bedroom HMO. I think that's a good starting point. I have a lot of people ask me, should I go for single let or HMO? I wouldn't go for a big HMO. That would be a massive no-no. I would not go for a 7-bed, 6-bed HMO straight away. I'd say you want to go for a 4 or 5 or even a 3-bed HMO. You know, these are all things what you can look at, do the numbers, stack up the deal, see if it works. But if you're in an area that's got hot demand for rooms, then I believe the risk is lower if you do a small HMO than if you do a family home. With a family home, if they move out 1 month, you still got to pay your £400 mortgage. You know, that's still your outlay. The bills can get complicated as well. Whereas with the multi-lets and HMOs, you cover the bills, you sort out all the bills, you know exactly what you're paying. You don't have to mess about with chasing people. Another thing that's quite controversial, working with investors and JV partners from early on in your career. Do I think it's smart to start borrowing people's money and start buying properties? No, I don't. I don't recommend you do that at all. But what I would say is, if you're working with investors from day one on a small scale, £3,000, £4,000, these people that you're working with have access to a lot more funds. If the first one goes well with them, over a very small investment, £3,000, £4,000, £5,000, £6,000, you can progress with that same investor and they will come in on the next deal and the next deal and the next deal. I have an investor I've been working with called Kiran, and she's been involved in 3 or 4 different projects. So she's been there from the early ones to now the recent projects, just on a small scale. There's definitely a place to do that. So just keep that in mind. Am I saying stop borrowing 20, 30 grand on your first deal? No, do not do that. Yeah, leveraging other people's money is great, but it needs to be win-win. And I've had people saying to me, I want to feel proud and I want to feel like I can go and tell my mum and dad that I've done it myself from saved up money that I've done all myself, which is fair enough. But to me, you can still be proud if you've worked with other people. In a way, you should be more proud because you've helped certain people grow their part. You've helped other people make money as well as yourself. So I think there's a lot of stigma around working with investors or working with different people, different JV partners. But I don't think it needs to be that way. I feel like if you're helping other people make money and you're making money yourself, then is that not a win-win? Comment below, guys. What do you think? Should you build your portfolio yourself? Or should you start working with people and JV partners and investors? You tell me, guys. Let me know what you think, because I'm interested to hear what you guys think about it. I think it was a bit extreme for someone to say that it's kind of morally wrong to work with people, like it's a bad thing. I think working with JV partners and investors is a great thing, because when the deal goes well, you've made the money. The deals have got to work, guys. They've got to work, because you're working with people's money. It's not a joke. It's not a joke. So what am I looking to do right now? People ask me, what are my plans in terms of growing this portfolio? Where do I want to take this whole property thing? Now, what I would love to do is meet a multi-million-pound JV partner and actually build a large portfolio with them. If someone came to me and said, listen, I've got 3 million, 4 million, I know that we could build a very high cash flowing, large portfolio with that investment. But yeah, in today's video, we're talking about the realities behind property developing. The reality is it's stress. There's so much paperwork. Paperwork. That's a massive aspect. Now, anyone that's buying up properties, you'll know there's so much paperwork involved when you're using mortgages. Now, if you're buying in cash, I believe it's a lot less paperwork, but there's still a lot. But when you're buying through a mortgage, the mortgage company is going to ask you to provide the most information. So if you're not ready for that, if you don't like paperwork, then either delegate that to someone else or just don't start buying property. Well, on each purchase, you're going to have to provide, say, 3 to 6 month bank statements. You're going to have to provide a portfolio fact find, so you're going to have to fill in details about all your existing portfolio. You're going to have to fill out sometimes a business plan when you're doing buy-to-let mortgages. So a business plan, this is like, ask you tons of questions. You've got to fill them all out. You've got to provide your ID to the mortgage broker, 2 forms of ID. They just make you mess about. For example, I have addresses wrong on my driver's license, so they're making me actually send off and get a new license with my new address, and I've already got a passport. So they're just very, very meticulous. To the mortgage company, you need to send your proof of address. They'll want to see like 3 or 4 different proof of addresses. Your previous addresses, they might want to see them. So there's a lot of information that you do have to provide. So if you don't like paperwork, you best find someone that's good at paperwork. But let me tell you about the good sides about property developing. The good side is obviously the cash flow. So if you do it right, you have a couple of HMOs, you know, you have, say, a good amount of properties. The cash flow, what you can get, especially from HMOs, can actually be life-changing in terms of allowing you to potentially leave a job which you don't like. That's what I've actually done. So you might be starting out in your journey, you're hearing people say, listen, I left my job, I quit my job, and now I'm doing property full-time. And it seems a bit like not real, but I can tell you, it is real. And I've done it. I'm not just here speaking in theory. This is actually, I've done this. Like, I did start out with little to no money, purchase a property, worked with investors, did JVs, building this portfolio of properties. And now, obviously I left my job about 1.5 years ago. I've been in property for 4 years. So for the first 2.5 years in property, I was grinding. I was working full time. I was working at another job on the side. I was working in a sales call center selling insurance for people's Sky equipment, and I was working with disabled people on the side as well. So I was probably working around 45 hours a week, and then that was for about 2.5 years, and then I was able to leave that, stop doing that, and actually do the properties full time. There was one point where I was all in. That's another thing what people don't talk about, being all in. There's been a lot of times where I've had to invest all my money into a deal. Obviously I kept a few thousand there, but literally everything's been invested. So there's been times where I've been worried, like hoping and praying that nothing breaks this month, so I don't have to pay for any repairs. So I don't really hear people talking about it being all in. Speaking with Ruth Hobbs, I've got an interview with Ruth Hobbs. It's on my channel. You can find the link in the description. And she talks about being all money down. People talk about no money down deals, doing JVs and doing no money down deals, but you know what? People don't talk about all money down. So this is something I really want to speak to you guys about as well, is all money down deals. This is going to happen when you're starting out. You're going to have to invest everything to do these deals right. Hopefully you don't have to do that, but there is times I've done it. It's not a nice feeling because it's quite scary. Ruth Hobbs says she's done it as well, and she's well into her career, so that kind of makes me feel a lot more good about what I'm doing. And because when you start listening to people that have been in the game for, say, 20 years and they've been doing development projects for so long, they're very successful developers, and they're doing the same thing as you. It just gives you that confidence that, yeah, I'm doing the right thing. If you've enjoyed the vid, like, comment, subscribe, and I'll see you all soon.